Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 14th of May. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, let's have a look at ES. Okay, just tracked sideways today. 60-minute sell signal nonetheless made it halfway to target. You can actually make target on these signals just by tracking sideways if you wait long enough. And NQ, that was going up a little, so the signal is not close to the target. But YM made the target today. It had actually gone down, unlike the others, but it didn't go down an awful lot. Going down very slowly tends to make the signals make target faster. Looking at RTY, if it had a signal, it would have made target. This kind of looks like a bull flag. All of this is suggesting to me that we're going to see a retest of the high on ES tomorrow, and then we'll see what happens there. We could get some decent 60-minute divergence on the RTH charts, but equally, we could just be doing a bullish consolidation. Let's have a look at the bigger picture charts. Okay, looking at looking at ES first. Obviously, on SPX, here we are. We had resistance at the 200 EMA. Now, I was saying in a post last week that if we broke and converted the 200 EMA, that would put the high retest on deck, and the high retest is on deck. I'm not expecting to see it immediately. I'm expecting to see some retracement first, and I think there are some decent indications we might see that retracement. We haven't seen it yet. But after that, ideally, what I would like to see is a move back into a back test of the 200 EMA, so drop about 150 handles or so, and then I'd like to see a move up into the retest of the all-time high, because I think at this stage, I think that's more than likely, and it's more likely the less time we wait, because actually in the euphoria in the 2 or 3 weeks after this China delay, we're more likely to get a high retest than I suspect when we've had more economic bad news later on. We shall see. All right, looking at the SPX short-term chart, RSI 5 sell signal on 15-minute made target. We've still got an open one on the RSI 14, didn't quite make it to my resistance trend line. Looking at Qs, we are still going straight up here. We're actually getting to one of the highest readings on the RSI 5 we've seen on this chart. But this is actually only a 3-year chart, so that's something to get too excited about. On the 15-minute chart, we have gone a little higher here. Arguably a little negative divergence here, but it's not strong divergence on the hourly chart. Hang on, sorry, let's just move that out of the way. This is weak divergence. For stronger divergence, you need a clearer divergence with really a larger retrace in between. We'll see how that goes, but on the 15-minute, hasn't quite reached the trend line either. Obviously, we lost the RSI 14 sell signal on the 15-minute. And it's made the possible near-miss target here, made the full target on the RSI 5, hasn't quite made it to the support trend line. Watching this with interest, but we're really going to need, I'm biased. Without decent retracements, I don't really get patterns. But I am leaning towards seeing the retracement. But I have to say, the going sideways isn't strengthening the case for it. All right, let's have a look at IWM. Now, on the daily chart, nice breakup. We haven't broken over declining resistance, which I've got in about the 211.50 area. As and when we get there, I'll be watching that carefully. On the hourly chart, we didn't have sell signal because we didn't make a second high here. We're going down a little, but it's not been an awful lot. Could just be a small bull flag forming. We never had any sell signals on the 15-minute. Looking at DAX, we've gone higher. We've got a possible weak RSI 5 sell signal brewing. I never really gave much thought to what would happen after this, after we got back into the retest of this high, but this could very much go higher. Nikkei still holding above the 200 DMA more or less, but back testing it today. All right, let's have a look at the DX chart. Okay, DX. We came up to this declining resistance trend line and we've held it so far, and it's a decent looking trend line. We had a little sell signal, it's made target. I am wondering if we're going to have another crack at breaking over this trend line. I'll talk more about this on the RTH chart, but I have got more to say on the dollar. On ZB, we made the little head and shoulder target and we are going down here. Now, this point here, just to remind you, is the point at which the administration delayed most of the tariffs because apparently they were worried about bonds going so low and yields going so high. So we're almost there. Needless to say, this could get interesting. And again, I've got more to say about this on the RTH chart. Let's have a look at that. Okay, let's have a look first at the bigger picture charts on that. Now, TNX, we had this little IHS broke up and we're heading back up into the target. The target really for this is this lower arrow here in about the 45.8 area, and we're getting pretty close to it. After that, bigger picture, I have this returning most likely to first this declining resistance, which I've got in the 47.80 area, and then the retest of this high here at 49.97. Now, on the bigger picture chart, this is an IHS neckline, and this is that bigger picture chart. So if we're going to see a bonds crisis this year, and really, I think it's very possible. I'm planning to do a post tomorrow, but the numbers on tariffs are pretty horrible. It's a big tax rise on ordinary Americans. I really don't think the big beautiful bill the Republicans are going to work on is going to help much. If they take 15 million Americans off Medicaid, so they no longer have health insurance, well, quite a lot of those are MAGA voters, I think. This looks like a political disaster in the making. 76% of the country I'm reading doesn't want it. And on the campaign trail, Trump promised he wouldn't do it. And that no one would lose their Medicaid benefits. So this looks like a disaster waiting to happen. It's also a disaster waiting to happen because the overall bill would cut taxes and raise the deficit. I'm not convinced about. Well, I don't think anything else really that is being done is likely to reduce the deficit much. So if this is going to increase it, then it's just increased. It increased, well, it's the national debt didn't have a great time under Trump last time. If it's going to have a bad time under Trump this time, well, to be honest, it's kind of at the edge. I think that could cause a bonds crisis. And, well, then we could see this IHS start to play out to the upside. It's a long time since the Americans had a probable bonds crisis, but everything is being done to suggest that we might see one this year. We will see. All right, looking at USD, this is the declining resistance trend line we hit. It's holding so far that we might have another crack at it and go up through it. We've already made the IHS target. On the bigger picture, what I would say here is I drew in this flag spot, and we hit it, and it's holding. This could be a bull flag. Now, I have been reading around on this, and there are quite a few people suggesting that the effect of tariffs will be to strengthen the dollar, and that, if that's true, I'm not entirely convinced that it is, but if that's true, then we could retest this high, because this is a bullish pattern. A bull flag is inherently a bullish pattern. Now, it doesn't break up all of the time, breaks down 30% of the time, but usually it breaks up. If it breaks up, then that gives us a retest, and that gives us what would probably be the second high of a double top. We're a long way away from that retest, and we might not make it, but I'm still certainly throwing it out there and considering it as a possibility. All right, let's have a look at the other currencies. USD, broken up slightly and pulling back. Natural direction I'm leaning towards is up, but we will see. If the dollar goes back and retests the high, this would go down quite a bit. So would GBP. Possible level top here, of course, although on the bigger picture, this looks rather more bullish. So looking at USD JPY, possible big head and shoulders here, which would be playing out if the dollar would have a decent shot of playing out if the dollar went down. Not so much if it goes up. USD CAD, don't have an awful lot on the USD CAD here, apart from on the bigger picture, we've got this very big pattern from the 2008 to 2011 lows, and it's a pretty decent looking channel. if we break down from this, again, that would look rather bearish, and we've got a potential very nice looking double top here. We'll see how these go. I'm keeping an open mind on the dollar, but I'm very open to the possibility we see a big rally on it. CL hasn't made it to the target yet. Slightly concerned it's below the monthly pivot here. This is suggesting that we might not make it to the target. Certainly I don't want to break this and convert at 61.55. We'll see. Technically this is a double top breaking down. We could see it go down to the weekly pivot at 59.26. We'll see how that goes. But I'm still quite liking the target upwards, but if this is an ABC flag, it's going to need to make a higher high over this high here, and I've got that just under 65. 65.5 is the pattern target, and that would be a good place to get to. We will see. And I've got possible trendline resistance up in the 67 area. We'll see how that goes. Looking at NG. NG is broken down. We've got a possible 60-minute buy signal brewing here, and we have a potential head and shoulders here. We're getting pretty close to this neckline. I was talking about this on the post-market charts yesterday, and the buy signal could be as we're about to make the right shoulder on a head and shoulders. Now, if this head and shoulders forms and plays out, it would get us back pretty much to these lows, and then that could be the second low of a double top, but really on the overall setup, I'd be leaning towards it going lower. GC made a lower low. This could be a bull flag forming. It's not likely to be a great bull flag forming, but it could most definitely be a bull flag. We will see where this heads up through from here. I am thinking this might go significantly lower, partially because of SI. Now, SI is starting to break below the monthly pivot and needs to break below the monthly pivot. The original channel I've got in red here broke, but I've got another one in purple, which is still in play. If we can get down to about 31.35, we can make that. And that would make, if assuming that was tested and held, this would make a really nice looking bull flag setup to go up. While it was doing that, gold would probably go down a bit more. Palladium, nice looking double top, hasn't quite made target, needs to get below the monthly pivot at 937.97, and it hasn't managed to do that yet. But I've got that target just a bit lower in about the 926 to 929 area. On platinum, we still got a double top here. It's showing absolutely no signs of breaking down. On HG, we broke up slightly from the falling wedge, and I'm thinking this is a retracement. You often see a sort of like a 50% back and then a move up, and waiting to see if we're going to see that here. Nothing much to see on the currencies. Looking at KC, we've got let's have a look at the metal. Sorry, bear with me a moment. Okay, hang on. All right, looking at gold. Gold looks like a bull flag forming, and I like this as a bull flag forming. Have we got any resistance not too far below? Yes, we've got 50 DMA at 31.50, which is a target I've mentioned before. Looking at silver. Silver, this is still a very nice looking bull flag channel. This would be a smaller bull flag channel within this larger bull flag channel. I think sooner or later this breaks up, heads back to channel flag resistance in about 34.5 area, and chances are it breaks up, although the flag target would only be a little higher at 34.86. I am thinking, though, that we might make a move up into this resistance slightly above the 38 area. Looking at palladium, still wondering about a retest of 808. I've mentioned that a lot of times. So I'm still wondering about it. On platinum, this is still a long consolidation. I'd be leaning slightly towards this breaking down out of it, but really it's just a long consolidation and it could break either way. Looking at copper, we have some bit of progress to the upside here. Bigger picture, I'm looking at a double top here, and I'm liking it. It's nice. So sustained breakdown below this 3.9 low could take us down an awful lot lower. And if US is in recession, I'm still leaning towards that. Then that is an obvious thing to see in a recession. All right, tiny bit of positive divergence here on GDX, but GDX, we've got a possible bull flag forming. GDXJ, we've again got a pretty decent looking possible bull flag forming. We shall see. All right, let's have a look at KC. Possible bull flag forming, quite liking it. No current positive divergence. We went up a little too high on the RSI. SB, trying to break up a bit here. Not convinced it's going to make it. CC, trying to get to the double bottom target in the 11,250 area. Looks like it might have a shot. ZW, rallying a bit from a potential double bottom. It did make the lower low that I was looking for on the bigger picture chart. It has been noted to me that the demand situation is not looking good, and that may mean that this doesn't make that target. But it's not a bad technical setup. Corn needs to go a little lower to make my target there. Again, could be bottoming out here short term. Soy has responded positively to Chinese tariffs being lifted. Although I'd note, and I'm going to be noting in a post tomorrow, that they've not actually been lifted. They were at, I think, 10% from the 10% or 20% from the last time Trump was in office, and they've gone up 30% since. So actually, tariffs from China are at 50%. That's not an embargo level, but it's not a small level either, and it's a very sizable tax increase on ordinary Americans. Looking at cotton. But I think the Chinese will be buying more soy in all probability. Cotton, we're breaking down below the monthly pivot. This could be opening up more downside. Lumber, I'm still leaning towards the downside. Live cattle, seeing a little bit of a break here and a bit of a retracement. Not convinced it's going to be a great deal. Doesn't look too exciting so far, and I've got no real pattern taking this lower. On lean hogs, I'm leaning towards this just being a bull flag forming, rather than the head and shoulders, which has taken a very long time and not made target. Holding the monthly, in that case, monthly pivot may well hold the support at 96.08. All right, let's have a look at the bigger picture charts on those. And all right, let's have a look at coffee. Coffee, bull flag broke up, and I think this may be a larger bull flag forming, but we will see. Or we may just be pulling back a bit with 50 back before we head up to the high at 4.41. Bigger picture, this is very overbought by historical standards, and we may well be topping out. If we retested this high, that would set up a very nice double top. Okay, looking at sugar. Sugar, we have head and shoulders that is trying to break down. This means that we have a huge cavernous move down, potentially down to a target, basically half of the current level. I would be aware of this being long on the long side of this, just in case that pattern starts to play out. Looking at cocoa, again, very rich by historical standards. So wondering about some upside here. The target would be in about the 11,250 area. Could get us a retest, but it doesn't need to retest to get a double top. This would, I think, would be too high to take that seriously. Looking at wheat, we've seen a retest. Hang on, wait a second. Chart I looked at yesterday had the low here at 490. This doesn't seem to be showing that today. That's rather strange. Okay, may not have quite made that low, but it looked as though it had when I looked at it yesterday. Okay, that's actually kind of odd. I'll look at it tomorrow. This might be a slight issue with the data. Looking at corn could be making a short-term low here. We have broken this rising support though. If there's an oversupply of corn as well, which I understand there is, then that could take it down. Looking at soybeans, I've actually got trendline resistance. I was wondering whether it had the juice to reach this trendline resistance here, but it looks as though it may be reaching it. Didn't quite make it to support last time, but this all looks like a big bear flag. That I would believe. On cotton, I'm leaning towards this, heading towards wedge resistance. We haven't quite made it yet, and potentially starting to break up from this falling wedge. We've been in a very long decline here. It's gone down a lot, and I'm seeing this pattern. There's a possibility that we're going to be breaking up and making some tracks to the upside soon. Looking at lumber, messy bear flag here, but this looks like a bearish consolidation before we go back and retest this low here at 35250. That would involve quite a sizable drop from here. We shall see. And if the US economy is in recession, that's the kind of thing that happens in recessions. All right, great. In that case, that's a wrap. I will catch you guys again on Sunday, and watch out for a post. I'm planning to do one tomorrow. All right, take care.